Good morning, good afternoon, everyone. It's a pleasure to be here. And on behalf of the ReMark team, I'm proud to present to you today the latest edition of our Global Consumer Study, known as the GCS. Thank you for joining me today. I'm glad to share that the report was only publicly launched yesterday, so you're one of the few people internationally to see the report. In this session, I'll be giving you a brief introduction as to who ReMark are, the context of our study, and then delving into the insights straight from Gen Z and Millennials. Next slide, please. Perfect. So the name of our title for this year is A Decade in Review, Paving the Future of Insurance. Next slide, please. So established in 1984, ReMark is a global provider of insurance solutions and services, helping carriers worldwide to grow through consumer insights, through marketing campaigns, and through tech solutions. Over 39 years, we've conducted over 12,000 marketing campaigns, reaching 1 billion people internationally. And we offer solutions that cover the end-to-end journey from acquisition and engagement to health and wellness to underwriting and claims. If you're looking for support in any of those areas, we would be delighted to talk to you after this event. Next slide. So without further ado, it would give me great pleasure to introduce to you GCS 23-24, A Decade in Review, Paving the Future of Insurance. Thank you. So since 2014, GCS has been ReMark's flagship in thought leadership. It is one of the largest surveys of consumers around the world designated for insurance executives and leaders in the industry. We do this to ensure that we stay people-centric and to amplify the voices of insurance consumers. We want to guide the designing of new insurance products and solutions, and we want to connect insurers to consumers, reminding them that beyond the mortality rates and risk models, there are people at the end of the journey there. In this 10th edition, we have continued our 22 key markets and surveyed approximately 12,500 Gen Z and Millennial respondents. We have this divided between what we call established and growth markets, and we are offering insights covering consumer journey, life and health, P&C, and this year, for the first time, including topics such as retirement planning and social media usage. Now you know where our research has been conducted, I'd be really curious to know where you are all dialing in from today. So I'd like to request some audience participation, if you can. So if you have your mobile phone handy, could you please scan the QR code on screen and let us know where you're based? So I see San Jose, lovely. Mexico, San Fran, San Diego, Charlotte, Texas. Ventura County. Minneapolis, lovely. Quebec City, Canada is here. Fantastic. Thank you, everyone, for that. It's great to see so many diverse locations. I myself am based in London, England. For our next slide, just like to set the stage for our discussion today. So this year, our findings have been regarding online reviews, embedding insurance, and healthy living. So as you saw in the video, good online reviews, not price, drive insurance purchases among Gen Z and millennials. 54% of Gen Z are happy to embed insurance in ride-sharing apps such as Uber. And health-conscious living can be a strong predictor of insurance purchasing. So I'll go through all of these as we go through the report. This report was the first time that ReMark as a company have really focused on Gen Z and millennials. So I'd be curious to know, since in the US in particular, for example, official statistics shows that millennials are the largest generation now in the country. Is that something that your business, your business are aware of or exploring or adjusting marketing strategies to reflect? I'd love to know your thoughts by scanning this QR code to see what kind of actions you're taking, if any at all. Based on thoughts. Great. Okay, so no. Some people are exploring it, perhaps others are not. Okay, so nobody's actively exploring Gen Z and millennial consumers at the moment. Well, that's fine. Oh, we've got someone coming in. Okay, great, thank you. Okay, so the majority to seem that you're currently not exploring that, and that's absolutely fine. Hopefully, this session will give you some insight into what they're thinking and how it will work. Deep diving into the findings now, the first section will cover consumer insights. So well over half of our respondents claim to have good or very good knowledge of insurance, and they have a literacy score of 5.87 out of 10. This is lower than last year's report of 6.25, as some of you may know. However, last year's report included the older generations. A like-for-like comparison shows that literacy is slightly higher up from 5.52 for these specific generations. Despite their confidence and their knowledge, there's still a keen desire for more insurance education at 77%. Globally speaking, these generations prefer to learn more about insurance via one-to-one calls with carriers or agents. However, in the US specifically, taking an online course was their main preferred choice. When it comes to buying behavior, for the first time ever, we've seen that good online reviews are more important than price for young people when going through the insurance purchase process. In the US specifically, prices and reviews are tied at the #1 spot. Recommendations from family and friends are the largest triggers for insurance purchases. Unique to the US though, my employer was the second main trigger for insurance purchases in the top right-hand corner there. Interestingly though, when it comes to renewing their policy, 45% said they would prefer to continue with their existing policy rather than considering alternatives. I think this ties hand in hand with the good online review experience. If Gen Z and millennials feel that they're getting a good service, they will renew their policies, even though they are sufficiently tech savvy to compare the markets, look at aggregators, comparison websites, etc. for alternatives. Seems in the US, over half would be happy to stay with their existing provider. For the insights on how life and health will be coming up next. So Gen Z and millennials have grown up in a connected world, and this has filtered through to their health management. Approximately 70% of millennials and Gen Z say they regularly use health and wellness apps or are interested in using them. Not only are they aware of them, they acknowledge their ability to improve their overall fitness. What's also interesting here is that they have a willingness to share supplementary data with insurers, data such as wearable metrics, mental health history, and telematics data. Americans are more open to sharing data with their insurer than other established markets. The US sees a willingness of 76.5% compared to a global average of 72.9%. However, this data does not come free to insurers. Consumers want something in exchange. So when asked for what would the most appealing rewards be, discount on insurance premiums was the most attractive reward in exchange for data sharing, with donations to charity being the least appealing. Regarding mental health, Gen Z and Millennials report high levels of stress. 47% state that they are always stressed, always or often stressed globally. This is slightly higher in the US at 51%, with the largest cause of stress being financial issues. Additionally, we witness a relationship between social media use and stress levels. Only 24% of respondents say that social media affects their mental health negatively. However, when we cross-reference social media use against stress levels, we see an interesting pattern. In the US, consumers who say they check their social media every 10 minutes, 65% of them say they are always or often stressed. This contrasts to respondents who never check social media. A mere 21.7% state that they are always or often stressed. Is this correlation or causation? We're not quite sure, but we found this relationship very interesting. On a global scale, we see that the US is listed as the 7th most stressed country in our survey. Ireland takes first place as the most stressed, with Indonesia being the most calm country in our survey. A new topic for this year is retirement planning. So 61% of Gen Z are taking steps to prepare for their retirement globally. In the US, this is slightly lower at approximately 56%. In terms of preparation steps, savings accounts are the most popular vehicle for retirement preparation. 25% think it's too early to think about retirement, while 14% state that they have no spare income or savings to allocate to retirement preparation. In last year's report, we also included P&C subject matter for the first time. This year, we've continued to dive deeper into P&C relating to motor and car telematics, embedded insurance, and new for this year, small amount stackable insurance. Regarding car telematics, we found that over a third of Gen Z respondents had telematic devices, with the highest adoption in Hong Kong and China. The largest motivator for telematics device installation is a cheaper premium at approximately 32%, I believe. This is closely followed by insurers mandating that young drivers need to have telematics devices installed as a condition of cover. It is often said, though, that these younger generations are more environmentally conscious than the generations before them. So it was surprising to see that cutting their carbon footprint came in dead last as the motivational factor for telematics devices. We also asked these generations what they would like as rewards for good driving behavior. With the cost of living crisis and higher fuel prices, it comes as a little surprise that petrol vouchers or gas vouchers and retail vouchers are the most appealing rewards for good driving behavior. In the US specifically, retail vouchers were the most appealing rewards. The concept of embedded insurance is not new to these generations. So awareness is highest in Taiwan and lowest in Japan. And embedded insurance is often thought of as extended warranties for white goods or televisions, etc. And we found that the biggest barrier to people purchasing embedded insurers is price. So we asked Gen Z and millennials more relevant examples as to whether they would use embedded insurance. So we used the example of ride-sharing apps such as Uber, or using public e-scooters and e-bikes, which you find in metropolitan cities around the world. When asked if they would be interested in embedding insurance to their booking fee to protect them against injury or accident during their ride, 53% or 54% of Gen Z respondents said they would be happy to add insurance cover to their booking when using ride-sharing apps. We also asked about small amount stackable cover, and there was a 63.3% interest in this concept globally. For those unfamiliar with this concept, small amount stackable insurance is a concept that was pioneered in Japan that allows consumers to incrementally contribute to a policy based on their spending. So, for example, if I was to buy a coffee for $2.70, my credit card company or bank would round that value up to $3, and that 30-cent difference would be taken as a premium to contribute towards a pre-selected policy that I had chosen. And over time, as my spending would increase, the sum assured value would increase as well over time. Those insights conclude the specific Gen Z and Millennial findings from the market research. However, as I mentioned, this is the 10th edition of the Global Consumer Study. So in addition to those insights, we decided to take this opportunity to analyze the entire data set we've collected from the first consumer study in 2013-14 and identify what patterns and trends we could find. So ReMark's in-house data scientist team used some advanced statistical methodologies and came out with the following findings. So the purchase evolution over the last 10 years has had a dramatic change in the landscape of consumer behavior. So in our inaugural report in 2014, we found that traditional socioeconomic factors played a prominent role in driving insurance purchases. Thereafter, though, an interesting pattern emerged where health and technology indicators, such as the adoption of health apps and wearable devices, began to gain significance. These factors reached their peak predictive performance in 2017 and 2020, as you can see in those years in between them, suggesting that there was a fascinating trend of health-conscious consumers seeking insurance during this period. In 2021, though, we saw a rapid re-emergence of the traditional financial and demographic factors of purchase. So variables such as home ownership, parenthood, and age prominence, gain prominence. This shift may have indicated a return to primary considerations, where individuals prioritize long-term financial security amidst the uncertain times of the pandemic. Interestingly, though, however, in the bottom right corner, you'll see that our analysis revealed an unexpected gender-specific pattern. So while the indicators such as health and technology-related indicators remain significant overall, women appeared to contribute to the increase in predictive importance for these factors, particularly in 2016, 2017, and 2018. So traditionally, men would typically lead insurance acquisition. However, these 3 years showed an atypical deviation from the norm, signifying that women had a more influential role in shaping insurance purchase decisions. At the same time, that coincided with the rise of health and tech indicators. As I mentioned, in 2021, we saw a rapid reemergence of the traditional financial and demographic factors. I think the effect of the pandemic is clear here. We saw a shift to more male purchasers who were less health focused, less educated, with lower levels of employment. And you can see that particular spike there on the graph in 2021 where the male propensity to buy was significantly higher. Looking at the most recent survey, however, in 2023, we seem to have a coexistence of pre- and post-pandemic mindsets, where the consumers are still influenced by post-pandemic insecurity and uncertainty. So although life has returned back to normal for most of us in our social lives, our travel and leisure, there is still a time lag and a hangover from the pandemic in the financial decision process that we're seeing at the moment. Now we've come to our final insight of this 10-year review section. But before I share it with you, we've got one last QR code that I'd like to you to interact with. Over the 10 years, what we looked at was the most powerful predictor of propensity to purchase insurance from our data. So before I reveal what it is, please scan the QR code and share which of the following 4 factors do you think was the most influential over our data set of 10 years. Okay. Income, insurance literacy. Okay, great. Okay, so we have income first, insurance literacy second, education, and finally residential status. Okay, so a clear winner of income. So I can actually share that insurance literacy proved to be an instrumental predictor, particularly amongst young consumers. So the data demonstrates that insurance literacy significantly enhances model accuracy across all the scenarios, implying that gaining insights into consumers' understanding of insurance matters or even holds greater importance than financial, demographic, technological, or health-related data, as you can see from the graph on the right-hand side. Probing further, however, reveals a more interesting pattern on the bottom left. When cross-referencing age, propensity to buy, and insurance literacy, we found an interconnected and inverse relationship. So for those in the 20 to 40-year-old cohort, higher levels of insurance literacy correlate with a higher propensity to purchase. However, if we shift our focus to individual age over 40 and above, we observe the inverse relationship. So those with lower literacy scores displayed a higher likelihood of purchasing. So this shift could be attributed to the fact that older individuals who have higher literacy scores are more likely to have purchased or acquired insurance already, while those with lower scores are entering the insurance market later in life. It is conceivable that the less literate elder demographic that are often burdened with financial responsibilities and commitments may lean on the perceived security that insurance offers, even compensate for. For insurance providers, this underscores the importance of enhancing customer education and communication strategies to empower consumers with the necessary knowledge and shape them into making well-informed decisions. Great. So those are the insights of our GCS 2023 report. I'd welcome the floor to any questions that you may have. Please fire away.
Awesome. Perfect. For our audience, please use this opportunity to interact with Rishi. And Rishi, we do have a question here. You addressed the importance of online reviews. What can carriers do to support this?
Absolutely. So the level of good online reviews is an indication of the importance of the customer journey. So the reviews are a byproduct of experience that they've had with an insurer carrier. So a poor experience risks generating negative reviews. So what's important for carriers here is that from application process to underwriting to all stages of the customer journey, uh, they need to provide a good overall experience, whether that's simplification or streamlining. And with that, you'll be able to best position yourself in a scenario where Gen Z and Millennial are more likely to give you good reviews, but also champion the company to their friends, family, etc. This is something that we work closely with our clients with at ReMark to understand their customer journey and see where our solutions and services can provide a better experience for the customer.
Awesome, perfect. Okay, we have a bunch of questions coming in. Why would a higher education of insurance result in lower purchases?
Sorry, could you repeat the question, please?
Yes. The question is, why would a higher education of insurance result in lower purchases?
We're not suggesting that higher education leads to lower purchases. We're just suggesting that it depends on what life stage you're at. So for the younger generation, the more literate are purchasing more insurance. However, as you get older, the higher education, the more literate people seem to be purchasing less. And we suspect that this is because they have that grounding in the value of insurance already, and therefore have already purchased perhaps a whole of life or a term life product earlier in their life, and therefore they are less likely then to repeat buy or take out a new policy later on in life, seeing as they already have cover.
Perfect, thank you. And I see that our friend Abel from GMP, he posed a question here. He said, in the case of gamification, is it still you're saying that's growing, and specifically with your Good Life solution?
Yeah, thank you for the question. Yeah, so for those who may not know, the Good Life solution is ReMark's health and wellness proposition. It is based on a biological age metric. So depending on 5 variables, just sleep, BMI, resting heart rate, steps, and calories burned, users are given a biological age, and which shows them, based on their activity, how much younger they are relative to their chronological age. And so this is a engagement piece that we're seeing used extremely well, particularly in Asia. So we've launched this proposition in the likes of Hong Kong, Taiwan, Thailand, and Hong Kong. And what we're seeing with the gamification is that the appetite for such products varies from region to region, culture to culture. And we're seeing, although we have good growth in Asia with the younger demographics, it's not necessarily a like-for-like transfer from region to region. So what we would do in those instances is that we tailor the gamification experience to what the local kind of customs are or the traditions are, and then we would adjust the level of the gamification more or less depending on what the local appetite was.
Perfect. Thank you, Rishi. And Abel, I hope that answers your question. And the next one is related to social media. Rishi, since you highlighted the Gen Z and millennials spent more time on social media, which is true, how would you recommend insurance companies efficiently engage with these younger generations through social media and influencers?
Yeah, that's a great question. I think what we need to keep in mind is that, for example, when I was talking about insurance education, we've seen that insurance literacy is a predictor of propensity to buy, and therefore we can use these social media channels as a way by which we can educate consumers. As we see in the data, this varies region by region. Some would prefer kind of newsletters or regular communication from their insurer. Others, however, would not be open to those ideas, and they would actually prefer video content where they could, watch it on YouTube or one of the video platforms. Additionally, something we see that's very popular is short form content, such as on TikTok videos, where you would explain an insurance concept to the consumer base. What is key here is being where Gen Z and millennials want to find you. It's all well and good, for example, putting blog articles on your website. However, if Gen Z and millennials are not looking for it, we need to provide the right message at the right time, at the right location. So this is something that we would work with our clients on at ReMark to ensure that they have a coherent social media strategy and make sure that we're providing value add to the consumer, whether that's through education or engaging them through exciting content.
Awesome, perfect. And our next question, I assume, is from one of our Japanese corporate partners. Do you think the type of micro insurance that you exampled in Japan would work in the US? Is the Japan product wrapped around a payment portal or gateway?
That's right, yes. So it's in Japan where this is pioneered. So it's the concept is known as SASTI. I'm sure our attendee is familiar with that. And here in the US, with the varied methodologies of payment, such as checks still in use, statements still in use, this would vary from region to region. However, I think with the young generations who are more familiar with now Apple Pay, Google Pay, using contactless payments and other sort of kind of initiatives, the US one is, I forget the name. There's a platform by which you can send money across to other people. But with the adoption of these technologies, I think that yes, there is an appetite for Gen Z and millennials in the US specifically. I have, for example, some statistics. So in the US specifically, 65% of respondents said that they would be interested in this type of product. So that's a significant amount that would be open to this idea. I think the key here is to ensure that it's a seamless, convenient experience for them. If there's too many buttons to click, if there's too much red tape in the process, I think we'll lose customers. But if we can ensure through perhaps one-click approaches or ticking a checkbox, I think that would be the most seamless experience for Gen Z and millennials to embed this type of insurance.
Perfect. Thank you, Rishi. And I see we have a lot of questions coming in. So just stay on the line. We have enough time today to go over all of them.
Yeah.
The next two questions will be related to mental health. One is, mental health is a hot topic. Is it unclear how insurers can help? But it is unclear how insurance can help. Do you have any suggestions based on your research and insights?
Yeah, absolutely. So looking at the study panel that we had, the biggest stressor for mental health was financial issues. So this is something that the insurance industry can naturally fit with, whether this is through education or providing our products. We can support them to make better financial decisions and improve their resilience against shock, costs, or financial stresses. Another opportunity that we have as insurers is to do this through health and wellness. So we see from the data that they often rely on exercise and fitness to manage their mental health. So insurers can offer incentivized wellness programs to support and encourage healthy behavior, which will have a direct beneficial impact onto their mental health. We actually will be hosting a seminar on this topic later on in the Winter Plug and Play Summit. So if you would be interested in learning more about that specifically, I would advise you and recommend you to join in that session.
Perfect. Okay, the next question also is related to mental health and social media. How should insurers think about millennials and Gen Zs focusing on wellness but spending more and more time on social media, known to impact mental health and increase stress?
Yeah, that is a tough question. How do we strike the balance between good social mental health social media use for mental health, and also the negative side of it? Um, it's a tough role for insurers. In terms of the mental health side of things, we see from the respondents that they find talking to friends and family, physical exercise, and meditation is the most helpful for their mental health, which obviously directly relates to social media. I think from our perspective, as I said in my previous answer, the mental health side and the relation with social media, I think it's our role to educate, inform, and engage as best we can. We need to ensure that we can inform these consumers of how to make better decisions financially, develop resilience, and better protect their assets and families. And I think that's kind of the limitation or scope of our role as insurers. I think beyond that, it'll be quite difficult to kind of negate any sort of negative social media impact. All we can do is incentivize and encourage and educate.
Perfect. Okay, our next question. Please, do you think it is possible to sell life insurance online with the assistance of a digital human avatar with whom you can have a personalized dialogue in real time?
I believe so, yes. So depending on obviously the complexity of the product, I don't see why that is not possible. We're seeing the actual use of this with the likes of AI, chatbots, and other such technologies, that we're seeing a humanless interaction between policy issuance and policy purchase and issuance. For example, in Switzerland, we're seeing Swiss insurer Helvetia introduce ChatGPT as part of their customer service, but also their insurance purchase process. So over time, I think, obviously depending on the complexity of the product, we will be able to see a humanless interaction between insurer and consumer for policy issuance, whether that be something simple like AD or term life, etc., etc.
Perfect. And then we'll shift our focus a little bit to the elder generations. Has your research for these age groups given any signs of the shift from a DNA mindset for older generations, shopping for themselves, completing tasks around the home, food delivery, etc., to paying someone with expertise to handle those tasks on their behalf? Thinking about this through the prism of reliance on experts or agents to make decisions.
Yeah, that's a good question. In some aspects, we see big generational differences between Gen Z millennials and the older generations. However, in other examples, we see that they aren't so different. So as I was mentioning before, with regards to learning more about education, about insurance, the most popular way by which consumers would want to learn about insurance is through one-to-one calls, whether that be with a carrier or through an agent. So, and that was on a global level. So I think, yes, there are some generational differences, but however, in some aspects, there is still an appetite to conduct insurance purchases as previous generations did. We see that generations such as Gen Z and Millennials, they feel self-confident in their knowledge to purchase products. However, we see that their literacy score is only 5.87, which is, we would expect, below average, the global average of previous generations. And they also have an appetite for education on the subject. So based on that, I think that there are, of course, naturally some significant differences in purchase behavior, such as good online reviews being the most important factor. However, in other elements, we need to maintain both sides of our service offering, where we're able to provide and cater to the needs of the elder generation, but also to the younger generation.
All right, that's great. And the next question is, you mentioned the importance of financial literacy, and sometimes too much information can lead to an inaction. How can insurance companies simplify financial literacy for the targeted audience, and at the same time motivate them to take tangible steps toward making the best decisions?
Yeah, that's a good question. So in terms of altering behavior and taking steps, what we're seeing for these generations is rewards and incentives is the best way to induce or encourage a particular type of behavior. So for example, as I mentioned, over 70% of Americans are willing to share their data. However, it comes with the demand, I should say, for rewards for those products. Sorry, could you just repeat the question, sorry, for the first part?
Yes, of course. Since we mentioned the importance of financial literacy and sometimes too much information can lead to inaction, how can insurance companies simplify financial literacy for the targeted audience, at the same time still motivate them to take tangible steps and make the best decisions for themselves?
Absolutely. Great. Yeah. So for this, I would say it's the ease of which we can have application processes, the underwriting process, and also the decision that's being made. So we need to ensure that we're being transparent in terms of what we're offering them, particularly around included terms or exclusions from policies, how a decision is being made, and why certain variables such as their smoking preferences or their location, for example, that influences their underwriting decisions, and the use of language as well. As we know, these generations have a short attention span, and so we need to provide clearly and concisely the key messaging and the value of the products that we are offering them. USPs, key benefits, etc. Those will be kind of the key messaging that we need to convey in a short space of time in order to encourage them to purchase insurance. And then once we're engaged, it will be through rewards and incentives that we'll need to modify or encourage behavior.
Perfect. And then the next question is pretty short and concise. How do millennials feel about paramedic insurance based on your research?
On what insurance, sorry?
The parametric insurance.
Parametric, did you say? Sorry. I'm not sure I'm quite familiar. Parametric insurance? No, I'm sorry. I'm not familiar with that term. Parametric.
Our audience posted here. Could for anyone who posed this question, can you be a little bit more specific and specify exactly what you intend to ask? Or as an alternative, I can connect you with Rishi later so you can have a private conversation with him and then dive into it.
Absolutely happy to do that.
Okay, perfect. I think we have like 2 more questions left here. One is, are you currently thinking about longer-term Gen Z trends of a more value-based consumer, like global warming, etc., as well as digitalization, like shrinking attention economy and digital friction?
Yeah, absolutely. Those are some of the questions that we asked in our survey. One of those, for example, when we found out what the causes of financial stress was, the other responses of that question were global insecurity, climate change, ESG issues, whatever that may be. So we do have some insights into that. This is the first time that we've dove deep into Gen Z and Millennials. So over the next few years, we will kind of be increasing the quantity and quality of the questions and the range of topics. So that is a space that we will be working on. naturally, at the moment in the US, millennials are the biggest generation, and Gen Z obviously will follow after that. So it's very important for us as insurers to understand what their preferences are, what their attitudes are, not just kind of in a financial element, but also from a socio-demographic, economic element, because we need to tailor and cater our offerings to them as we go forward ahead.
Perfect. Thank you. And the next question is about underwriting. Following the underwriting topic, what role do you think health wearables will play in the future of life insurance underwriting?
Great, thank you. Yeah, so I think what the ability of health and wellness wearables has allowed is for the shift to dynamic underwriting. As things stand, writing at the moment reflects a snapshot of a point in time where your risks are calculated and you're given a price quoted on that. The ability to use health and wellness data will allow for dynamic underwriting to take place. So there'll be a constant update of your risks and then for the corresponding price that comes with it. So over the course of a policy, if you see that consumers' health metrics are improving, they are reducing their BMIs, they're being more healthier, and therefore reducing their risks, you can then correspondingly adjust their risk terms. Also as well, it's a great opportunity for constant engagement. Wearables provide constant sources of data, and based on that, you're able to engage with consumers. And as we know, the more engaged a consumer is, the less likely they are to lapse, and you're more likely you are to retain them. So it provides a quick and easy channel by which you can constantly engage with the consumer. So in short, the ability to allow for dynamic underwriting and the ability to engage with your consumer to improve lapse rates, I think those would the impact health and wellness wearables will have on life insurance.
Awesome, perfect. And the next question is about pet insurance. How important is pet insurance for Gen Z? And knowing some of my friends' stories, I would say very important, but I'll direct that to you.
So pet insurance is not something that we look at specifically, I have to say. So unfortunately, I can't share too many insights on pet insurance as much as I would like to. I can, however, look back into the detail and get back to the speaker, whoever that may, or the question, whoever is asking that, because yeah, it's not something that we've focused specifically on the P&C side. It's usually been telematics, motor, embedded insurance, or cyber.
Perfect, thank you. Last question. What are some actions carriers can take to help improve insurance literacy?
That's a good question. So the desire for education, as we saw, 77% are keen on higher education. It's an opportunity for insurers to interact with consumers in a meaningful way. So as we saw, the preferences vary depending on the channel by which they want to do it. But it's important for carriers to build the tools and resources that can facilitate this education across multiple formats and platforms as well. So as I was mentioning, we need to ensure that we are providing the right content and the right messaging at the right place. And this is something that we do at ReMark, where we work with them to create educational content and then incorporate things such as insurance gap calculators into their customer experience, where, for example, a consumer can put their financial circumstances into a calculator, and depending on whether they have debts, mortgages, dependents, etc., we would say, right, we would recommend X amount of insurance cover for someone in your circumstances, and explain why that is the case and how it's calculated.
All right, perfect. I think that wraps up for the Q&A session. I know okay. I think we can do one more.
Sure.
Last one just came in. Is cyber insurance something millennials think is more important than older generations?
It is indeed, yes. So we didn't cover this specifically in this year's report, but we did in last year's report. And we found that there was an appetite. I think it was approximately 63% of respondents are aware of how their digital assets online are at risk from hacking, data theft, identity fraud, etc. And as a result, they would be interested in cyber risk. It's something that has been very common on the corporate side. However, for the individual consumer, it's particularly not that prevalent at the moment. It's hard for insurers to obviously assess someone's risk of how they are performing or what they're doing or their activities online. However, with the likes of the media spotlight on cryptocurrency, blockchain, NFTs, and how a lot of young people, whether they're influencers or social media personalities, their income depends on their online lifestyle. So there is very much an appetite for millennials for cyber risk. And it's these kind of factors which are leading to this interest.
Awesome, perfect. We do need to wrap up Q&A with that. You answered 16 questions, Rishi,
Wow.
in the past 20, 30 minutes. We'll move on to the next slide.
Yes, thanks, Zoe. So I just wanted to say thank you, everyone, for joining this session today. I hope it was useful. And if I wasn't able to answer one of your questions or you would like more information, please feel free to get in contact with me. The QR code here will direct you to the full GCS report, and you'll be able to read all of that at your leisure. But also, it will provide you access to our data dashboard. And in this data dashboard, you'll be able to see by each of the 22 markets, by generation and gender, all of our data metrics that we've used to compile this report. And you'll be able to interact and cut the data to any particular market or demographic that you see fit. So I would encourage you to scan the QR code, download the report, and also have a play with the data dashboard.
Thank you so much, Rishi, for your time and your insights with us today. And like Rishi said, for any of the questions that you want to dive into, please feel free to contact me. I will connect you with Rishi and make sure you guys are well connected and all of your questions are answered.